Hi, this is Elliot Wave Sage. I want to go ahead and do a market update. Like always, this isn't financial advice. So the market is going higher and it's just starting to accelerate. But if you've watched my videos, this isn't a surprise because we're waiting for the dollar index to fall further. And so it still hasn't reached our area yet. If you look at the sequence, it looks like an ABC correction, like a 1 2 1 2 3 4 5 3 4 1 2. So it looks like it needs a 3 4 5 and 5 to finish. So that's where we are at the moment. So I would expect still more upside in the market. What if it the dollar index were to go higher, then I would still expect it. I think this sequence needs to drop. It isn't ready yet. I don't think it's ready yet because of this divergence here between this leg. So we need that move down. So I do think the market is at risk of some like a euphoric blow off top type move tomorrow. And I warned you with technology, be careful why I left that trade yesterday with the scalp on wave two, and now I'm out because now we're playing out a wave three, four, five, and honestly, it can really squeeze higher. But when this is over, B will be set in place. It could be, like I said, I don't know how high it's gonna go, so it's really not a setup anymore that I'm interested in shorting. I think shorting technology is silly right now. It's dangerous. It's not the best trade. I'll show some other ideas that are better, but this is not one of them because this could accelerate and squeeze, which is typical of the final leg of a connector. Here we have an ABC. Typically, the way a C leg ends is a massive short squeeze to top it, and then you go down lower. So normally the C legs or the Y legs end with a bang, with a massive squeeze or dump or whatever you want to call it. They don't end with a whimper. So I do believe we could squeeze up and then that's it. The Dow Jones is still, I think, going to go a little bit higher. I do think it's in a 1 2 3 4 pattern or 1 2 1 2. That's probably a better way of labeling it for now. A 1 2, and then this is another two wave that we're in. That should continue higher for the moment. Uh, let's see again. Where is the Dow into? So as you can see here, you have three waves. You're down, and then you have. It looks like to me your leg, a connector, and one more leg higher. So a little bit higher. Maybe could go 300-400 points higher from here, and then that should do it. It should do it. As you can see, it found resistance here, but I think its sequence isn't finished yet. So I do think we have to finish this sequence. I think that's the connector for this leg. So I do think it can come up to this area still. The SPY, again, it's in, since we bounced higher, we're going to call it 1, 2, 3, 4, 5. And then here, as you could see, we have A, B, C. So that's your first A leg, a B, and now we're in C. And we don't have the BC yet. See this leg. So what I think could happen is we get a pullback that traps traders, and then a rip higher, and then a dump. Either after the announcement, during, this all can happen so fast, but I think this is the setup. I think we're probably ready for B, and then we get C, and then that should do it. 404 maybe, and then that should do it. And so again, that's the area. And then the triple Qs, like I said, one in, try to short it. I think it is this 345. IWM is in a two wave, and an A, B, C. I believe it's still going to go higher. in this area, 181. So the market, I think, should still go higher, but it could play a trick on traders where you pull back and then you come back and then you dump, something like that, just like you did here. So just keep that in mind. There's no way to really know for sure, but I think that's the most probable path and that's the market. And then Bitcoin, again, it's in this end and diagonal. Maybe it can grind up a little bit higher. Right now I have it as a 5 done here, but it can maybe that's just a 1-2 and we just keep grinding higher. But I do think it's due for a pullback, a pretty healthy pullback. Gold struggled today. It dumped. It's in an area where it should bounce. It's starting to bounce here. If we impulse down and break that low, then that will confirm the top. This is a top because then we'll have 5 down. So if this bounce fails and does that, then the next bounce higher can be a short opportunity. This would be an opportunity to short it. For potentially a large move down or just a small move, but I would be looking for that kind of setup. The other alternative is a more bearish setup as a 1-2-1-2 and it just crashes. The other is 1-2-3 and then you have a 1-2-3-4-5 and we're off by 5, a little bit's off, and then one tops. So a couple alternatives. We'll see what happens later. And let's see. The bond market, the 2-year, so we did pull back. Again, the 2 years have kind of been important on what we need to do. So this is typically how a move ends, right? So this looks like some kind of 1, 2, 3, 4, 5 here. So there's your A leg. And now we're in some kind of A, B, C, so probably a little bit higher, and then another low. And we know what happened last time to the market in the bacon sector when that happened. So look for that. Look for this setup in the 2-year up and then down. And the thing about B is though it could actually go up pretty high. So we don't know, but I do think it's got to go higher. And then the 10-year again is in kind of limbo. If it may be done, and we may be going to new highs. VIX really bottomed out today. Let's see where it may have found support. Where is its support area? Right where it closed today. So the VIX may have bottomed today. The dollar index needs, I think, more downside. Okay, so I was just going through the market. So commodities, I like to see go NRGU. Want to see that get down to 138. We had a bounce in energy today, so that could have been, I think, an opportunity to short. I think that was possibly a better setup to short energy. We have this 3-wave pullback right now. In NRGD, that could have been a good buy today, or short in oil, or short in the XLE, even if it goes a little bit higher. If you look at where oil's trading, it broke that massive top, and even if it does trade up a little bit, it's most likely going to fail, whatever this is, and you're going to get this big leg down. That should pressure energy. So I think energy was possibly a good setup today. Good setup. I believe the financials are opportunity. FRC was one, and I think they're getting destroyed after hours. So these financials, look for these pops come in. There's a lot of chatter about Wells Fargo. If we could get this bounce going, it may be so weak. It could maybe just do this and get back up to 40. That may be a good speculative put opportunity if this is one of these banks that no one knows about, that's super weak, but there's a lot of chatter on the internet, just like there was chatter well before a lot of these other banks were under stress. So could we have this 1, 2, and then a massive 3 moment? Maybe. Just keep that in mind. So then, technology is getting extended, but as you know, technology can really blow off top as people try to top tick and short it, and they just don't get it right. I still think it's missing a five here. Um, Amazon may if Amazon breaks this high, that will obviously have it push up to 108. If it does, Tesla here looks like it should be finished soon. Nvidia looks like it's almost done. This needs a few more. Again, see, tech isn't finished. Even bears now love Apple, right? I'm seeing all these bearish people like, oh, Apple's a good one now. Yeah, I think Apple you got to be careful with. So let's take a look at what Apple's doing and see what the setup looks like. Three waves down, a connector, and then it looks like some kind of five waves here. So it's like a W, an X, and then a Y. So that's W. So now we need X. So where does X go to? So X, we're in the final wave of X. So we know technology still has another high, right? So we have an A, a B, and now we need C. So I do think, yeah, maybe there's some bullish potential that's still here, just like and we finish up. But then I think that will be um, the end. So as you can see, technology still should go higher. So that's where that's what I'm seeing at the moment. So again, it is what it is. I don't know again why the market would want to go up. It's hard to figure out. Maybe they think there's a lot of easing coming. The Fed will pivot back to the good old days, the glory days of just print, 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 print. But I do believe here's what Elliott Wave Sage thinks. I think what is happening in the market is traders are responding to the perceived QE that has happened, but I don't think that QE is enough. I think the rates have gone so high in terms of what the financials and instruments can handle. I think there's so much liquidity evaporating from the market with banks just failing abruptly that the Fed is over tightening and it needs to put money back in much more than it's already done, and it doesn't even realize it. So I think it thinks it's done a lot, but I think it's not enough, and they just are blind to that fact. But I do believe that will come out soon, and then they will do a massive QE, which will end the correction when the Wells Fargo's and Bank of America start breaking down. But right now, I think it's not enough, even though it may be perceived by the market as enough. I think mechanically it's not enough liquidity being added to replace what is leaving the system, and that's my take on it. And the sad thing is that's just holding equities together. The commodity complex, I believe, is something that will continue to go higher once people realize the interest rates can no longer go up, and those will start to creep up higher, and then you'll get more inflation. So I think they're somewhat related, but I do think the Fed is in a really bad position. I think it's got to defend the dollar because you've had people going on TV recently pretty much trashing the Federal Reserve and what they've done, and then all the devaluation, and they just can't. I don't think they could just let the dollar collapse. They got to defend the dollar through rate increases in the end, even though it's not popular. So in some ways, I wouldn't be surprised if they do raise rates tomorrow to defend the dollar. And if they were to do that, that would probably cause a massive sell-off in gold, commodities, everything else, because nobody would be expecting that, right? Imagine if they come out with 50 basis points. No one would expect that. That would be a shock to the system. But boy, that would be a flex by Powell to do that. And then all of a sudden you got the market's attention. This guy's not playing. He is a Volcker. So I do think you guys thinking like, oh, it's never going to be 50. I think there's always a chance, but I do think he's got to do some rate increase. So we'll see what happens. But I do believe this is the count. More of a more. It doesn't look complete. Should go higher, and then that should do it. And then something really, really bad is going to happen here to cause this again. What horrible thing is going to happen to cause technology to essentially crash? Like something really bad is going to happen in the next 2 weeks. Could it be tomorrow, a historic date for the market? Maybe, but I do think that historic date comes a little bit later in the end of the month or early April. That's what it's looking like for tech. End of the month. So something really, a real catastrophe is on the horizon. Perhaps earnings will come in early April. I mean, but as you can see, we still have more melt up. But I do think this time frame, March 27, is possible. We see that turn. If this plays out a little bit longer, there is a chance this could just finish tomorrow, pop and reverse. We'll see what happens. All right, guys, that's my video.